at WIS, we get a lot of questions about your deposit and if this can affect your mortgage. So today we thought we'd do a quick video more on this. Hi, welcome back to our channel and podcast. My name's Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who haven't seen our videos, Ifti is an accountant and mortgage advisor who has been in the industry for over 10 years. And he is also one of the founding directors here at WIS. So welcome back, Ifti. How are you doing today?
Hi. Yeah, I'm very well. Thank you, Gemma. How are you doing?
Yes, very good, thank you. Today, I think this video is kind of more aimed at first-time buyers, isn't it, when we talk about deposits?
Yeah.
So we get a lot of first-time buyers here asking us questions. One of the most popular questions, and the one that I'll start with, is what is the deposit amount?
Okay, so the deposit is the minimum amount that you need to put down as a part of your contribution towards buying the property. So usually lenders start from about a 5% deposit, which means you contribute, if the house price is 100,000, you'll contribute 5%, which is about £5,000. And the lender contributes the rest of it, right? Mm-hmm. So if you're getting a mortgage, you will need a minimum deposit to put down. So the lenders won't give you 100% of the loan. You will have to put some deposit down, right? And it starts from about 5%.
Okay, so question number 2 that we get most frequently is, what does loan to value mean? Because I think a lot of people see this on price comparison websites and such, talking about a loan to value.
Yeah, it's the other way around, right? If you use the same example, the lender looks at it from a loan to value point of view, right? So if you put a 5% deposit, that means the loan to value is 95%. So that is the loan divided by the value of the property. So in that example we used earlier, if it's a 95,000 loan coming from the bank, divided by 100,000 is 95%. So that's loan to value. So if it is a 10% deposit, your loan to value is 90%, right? So that's kind of what it means.
Cool, thanks, Ifti. And the third question that we have today is centered around minimum deposits, because a lot of people say to us, hey, what is the minimum deposit that I can put down? So just to refresh everybody's minds, currently we're just about to enter 2022. So what is the minimum deposit required for a mortgage at the moment?
So the minimum deposit required is 5% as it stands, which is really good news. I mean, if you go back a year ago, right, it was quite scarce to get a 5% deposit mortgage or a 95% loan to value mortgage because, we were just still in the peak of sort of COVID times. So the lenders were being very, very cautious. But thank God the government decided to introduce something called a 5% government guarantee scheme. With that, lenders got a little bit more confident. So apart from the scheme, lenders they themselves have come up with a 5% deposit mortgage scheme. So some of the banks independently are doing this now, so which is really good news because if you go back a year, you wouldn't find these products. But this is a very welcome move for first-time buyers, right? So there are quite a few lenders out there who will do a 5% deposit mortgage, which is really, really good.
Yeah, definitely. So the next question that we have is about small deposits. We have people asking us quite a lot, if I have a small deposit, will this affect the amount that I can borrow?
Yes, it could, because a lot of lenders, they do income multiples, right? A lot of lenders will give you about 4.5 times income. Some will give you 5 times income. It really depends on the lender. But a lot of lenders, if you have a smaller deposit, the income multiples that they work with will reduce, right? So if they give 4.5 times income, they may give 4.25 times your income, or they might reduce it slightly more as well, right? So therefore, the amount you can borrow may drop. So that's one thing that could happen. And also what we find is with 5% deposit, generally you should have a very clean credit score, right? Because sometimes if your credit scores are not as great, we see that lenders are not offering the 5% deposits. They sometimes come up with alternative lending proposals, which means they say, can you put 10% or 15%, right? Mm-hmm. So we can see that happen more and more. So if you're thinking of a 5% deposit mortgage, it's always best to make sure that your credit file is clean and also speak to an advisor, because most of the times when advisors look at the credit reports, they know whether it will affect you getting a mortgage or whether 5% is going to be enough. So last thing you want to do is to run a hard credit search, and that may leave a footprint in your credit file, and that might affect you getting a mortgage, right? So that's why I said, just if you think your scores are a little low, or if you're not sure, you probably want to speak to an advisor on this one, because they are a little bit strict on the 5% deposit mortgages for sure.
Okay. Another question that we kind of get a lot based around deposits is, about alternatives for those people that don't have, say the bank comes back and says, actually I need 10% or 15%. So what kind of alternatives would you suggest to people if they needed more deposit and didn't have it?
Yeah, I think that's a very good question. There are some options out there for people who probably have to put a little bit more money. Help to Buy might be one of the options you have. With Help to Buy, you put 5% and the government contributes 20%. So that makes a 25% deposit. So from the bank's point of view, it's less risky to go with a client like that. So therefore, credit scoring might be slightly easier with that kind of mortgage. But of course, Help to Buy has some downsides as well. The biggest downside is you have to buy a new property. But if you're interested in a new property and you have just 5% deposit, Help to Buy might be an option to you. We also find that parents can join into the mortgage as well. So if you've got 5% deposit and maybe your parents can help you by sort of joining into the mortgage, either by helping you with the deposit to make it 10%, right? Or even a close family member can do this for you. They can give you some money towards buying the property. So that's option is there with the family. And also a popular concept we find these days is a joint borrower single proprietor mortgage.
Yeah.
So with that, what it means is you use your parents or close family members' buying power and their credit scores to help you get onto the mortgage ladder. But at the same time, you'll be sitting as the sole proprietor, which means your name will be on the deed, right?
Yeah.
Their name won't be, right? So it doesn't affect you with stamp duty and things like that as well. So if you are struggling to still have 5% and you can't make it work, this might be an option for you. So there are a few options out there. Again, I think a good starting point is looking at your credit file. So if you are speaking to an advisor, if they think it's not working, they can discuss these options with you. So so there are a few schemes out there which might help you.
And what about some of these helping hand mortgages that have recently popped up?
Yeah, of course, that's another alternative. Like I said, there are quite a few options out there. So helping hand is one of them. The lenders will give you up to 5.5 times your income, provided you meet certain sort of conditions of theirs, right? So that is one option that's there. But again, with helping hand type of mortgage, you just need to be a little mindful that one thing you will need something like a 10% deposit to start off with. And on top of that, credit scoring might be a little bit tough as well, right? Because obviously bank is giving you 5.5 times your income. So with that type of mortgage, they give you two options, right? One is either they can make a proposal saying we can give you 5.5 times, or the lender might come back saying, sorry, this is all we can offer you, right? They won't give you both options, sort of thing. So that's kind of there. But the good news, since you brought up this point, is there are a few banks who have actually started offering 5.5 times income as well.
Yeah.
So, initially I think we did a video which we spoke about this helping hand mortgage. But since then, there's been other lenders who sort of joined the party as well, right? So there are some more options out there, which is a really welcome news from first-time buyers' point of view.
Definitely. Wrapping it up, Ifti, there's just one more question that we have today.
Yeah.
Again, it's about smaller deposits. So what should somebody do if they have a smaller deposit and they want to buy a house? What would you recommend?
Yeah. Okay. Obviously, try and save as much as you can, right? If possible, cut down on some of your expenses, especially the discretionary ones, right? Think it's only for a short term until you buy your property, right? So try and cut down on some of those expenses, which might help you. Also, there are schemes like lifetime ISAs, right? So that gives you 25% deposit on top of your savings, right? One of my clients who's based up north, he was trying to buy a house. He had about £3,000 as savings, right? The houses that he was looking was about £100,000. So what he did was his target was to save £4,000, and with this scheme, he was getting £1,000 from the government, right? That makes up his 5%, right? So don't miss out on schemes like this because it's there for you, right, to help you get onto the property ladder. So try to make use of schemes like that, right? So if you have smaller deposit, that's kind of what it is. And we touched on areas like maybe parents can help you out, right? So look at those options if you really want to get onto the property ladder. So parents can either give you the money or joint applicant sort of sole proprietor mortgages. Those are options out there as well, right, for people who have a lesser deposit. So the good news is, there are solutions that we may be able to suggest, right? So it's always a good idea to speak to an advisor on these areas.
Yeah, definitely. Okay, thank you, Ifti, again for some more great advice. I just wanted to put a little reminder out there that these points may or may not be applicable to everybody. So please do check with an advisor to see if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details below because we are always more than happy to help. A little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.